I think that if you look at the decomposition of it, it's not as bad as it looks on the surface. It's still clearly weak, and we're looking forward to the rest of the data set that comes out this week. Just to elaborate, the export numbers actually came in slightly above consensus expectations, so people were looking for a lower number. The import data clearly was weak year on year. One thing to be noting is that that's in nominal terms, so there may be a price effect in terms of oil imports. Remember, oil a year ago was very, very high, so you get a step down in oil prices. So you need to look actually through to the volumes of imports to get a better sense of how underlying demand.
Okay, that's fair. What are you expecting in terms of GDP on Monday?
We're looking for around 7% overall in terms of year on year.
That sounds awfully optimistic.
Well, actually, in terms of the base effects, that's something which we think is a reasonable number. To be clear, there's a continuing debate about what sort of numbers are we going to see that China will report versus what's the actual activity level that's taking place.
I thought the Wall Street Journal lead column yesterday summarized it all. World to Fed, get on with it. I mean, I love my colleagues, you know that. I love the process of the FOMC. But they have egg all over their face. They look like
they have egg on their face.
They do. And you heard it this morning in your previous guest. But look, uncertainty is the enemy of decision making. We know that as business people. Make a decision, act on it, and things will work out better than if you just keep saying, like Lucy, pulling the football away every time that Charlie comes up to kick it. And that's sort of what's happening at the Fed.
2 weeks ago, we got a pretty lousy employment report.
That's one month's number. It's just one number, but if
I think they'll be modestly higher. Look, we think that the bar has been lowered so much on this earnings quarter that the vast majority of companies are going to be able to get above that bar. So we think it's going to be, an earnings win, I guess you would describe it as, at least certainly not bad news. We think that'll be enough to get equities up. But probably by the end of this month, we're going to see debate over what Congress is going to do, and that'll probably lead to more volatility for the next few weeks.
I do think the overall market will be higher, and I think there'll be more winners than losers. But I expect a lot of volatility this earnings season, and so we actually have a few extra dollars in cash in our portfolio to hopefully go shopping when we see some of the overreactions that occur during earnings season. It's amazing how a company can miss expectations by a couple of pennies or lower expectations by 5 cents, and you'll see a 25 or 30% whack to the share price. So I think there's lots of opportunity nowadays for long-term investors to take advantage of some of the short-term dislocations that we're likely to see.
Are there any particular